Hello everyone, welcome to the May 11th, Monday, market opening bell, your 10-minute guide to the stock market. Hong Kong stocks opened lower last Friday. The Hang Seng Index opened at 26,359 points, then came under pressure, falling as much as 351 points to a low of 26,274 points. It eventually closed at 26,393 points, down 232 points or 0.9%. Total market turnover was 279.7 billion Hong Kong dollars. The share index closed at 8,889 points, down 30 points or 0.3%. The Hang Seng Tech Index closed at 5,102 points, down 18 points or 0.4%. Southbound funds recorded a net inflow of 13.168 billion Hong Kong dollars into Hong Kong stocks. Key net buying included Kuaishou, 1.747 billion. Tracker Fund 965 million, Alibaba 389 million, SMIC 265 million, Sinuk 182 million, Pop Mart 133 million, Tencent 109 million. Net selling included Xiaomi 535 million, Yangtze Optical Fiber 198 million, Hua Hong Semiconductor 145 million. According to statistics, Southbound funds have net bought SMIC for 4 consecutive days, totaling 2.646 billion. They have net sold Hua Hong Semiconductor for 3 consecutive days, totaling $731 million, and net sold Xiaomi for 3 consecutive days, totaling $1.707 billion. For the full week, the Hang Seng Index still rose 617 points or 2.4%, reversing the 2-week losing streak. The H-share index and Hang Seng Tech Index rose 2.4% and 4.7% respectively. For the week, the Tech Index recorded its largest weekly gain in nearly 6 months. Technically, the Hang Seng Index filled part of the upward gap from last Thursday, which is 305 points wide between 26,213 and 26,518 points. Most of the gap has now been filled after short-term consolidation is expected to challenge 26,700 points. A breakout above 26,700 could target 27,000 points next. Mainland A shares traded mixed to slightly weaker, with the China export falling 1%. Turnover in Shanghai and Shenzhen exceeded 3 trillion yuan. The Shanghai Composite closed near 4,179 points. The Shenzhen Component Index closed at 15,563 points, down 78 points or 0.5%. The Chinex Index closed at 3,796 points, down 36 points or 1%. The renminbi central parity rate against the US dollar was set at 6.8502, down 15 pips for the day. China's General Administration of Customs released data on Saturday showing that April exports in US dollar grew 14.1% year-on-year, far exceeding market expectations of 8.4% and sharply higher than March's 2.5%. The strong growth was mainly driven by surging demand for integrated circuits and AI-related automatic data processing equipment. Imports in US dollar jumped 25.3% year-on-year, indicating increased domestic stockpiling of semiconductor components and energy. The trade surplus for April was 84.82 billion US dollars. Baidu rose against the market, according to information the China Securities Regulatory Commission website. Kunlun Core Beijing Technology has submitted coaching materials for its star market listing on May 7th, indicating smooth progress for its Hong Kong listing. The A-share listing is expected to complete in the third quarter or earlier. Positive news for Baidu. It has become common practice for tech companies to simultaneously pursue A-share listing coaching while listing in Hong Kong. Previously, companies such as Zhipu AI and Biren Technology made similar arrangements, with all work progressing as planned. By preparing A-share filings while pushing ahead with Hong Kong listings. Tech firms retain future domestic financing flexibility and demonstrate long-term confidence in China's capital markets. Kuaishou surged in late trading, rising nearly 11% at one point to $53.7 and eventually closed up 9.4% at $52.95, its largest single-day gain since January 5th. Turnover jumped to $9 billion. On the news front, Kuaishou's Kling AI recently launched a native 4K direct output feature in its Video 3.0 series model, the industry's first native 4K video model. It supports one-click generation of cinema-grade videos for professional clients in film, television, and advertising, delivering high-resolution footage with film industry visual effects without complex post-production. However, whether this upgrade can boost revenue remains a key focus for investors. Pop Mart rose against the broader market. Renowned investor Duan Yongping posted on social media that he had fully switched his holdings from China's Sanhua into the trendy toy stock Pop Mart. In reply to a netizen, he said he was once an entrepreneur and could clearly see how capable Pop Mart's chairman Wang is. He's still so young, he can keep doing this well for at least another 25 years. The power of compounding is terrifying. Hong Kong-listed wind power stocks fell across the board. News reports indicated that the Trump administration had halted U.S. onshore wind power project development on national security concerns, marking a major escalation in the fight against renewable energy. In addition, the sector is facing near-term fundamental pressure, with several companies' Q1 results missing expectations. Performance declines were mainly due to poorer wind resources in some regions, leading to lower power generation and falling average grid electricity prices in certain areas under market-oriented trading. Adjustment to VAT refund policies also impacted profits. Hong Kong-listed pork concept stocks also fell collectively. Current low pork prices are mainly due to oversupply, although the number of bleating sows is declining. Improved farming efficiency continues to put significant pressure on supply. In this environment, Muyuan Foods announced April sales. The average selling price of commercial pigs fell 35.5% year-on-year, causing sales revenue to drop 32.5%. The entire industry remains in the difficult situation of the more you sell, the more you lose, which as if directly weighed on related stock prices. LDRobot, stock code 1236, which will be listed today, traded in Philip Morris Grey Market on Friday at $49.8, 88.9% or $23.44 above its listing price. Excluding fees, each lot 200 shares showed a paper profit of $4,688. LDRobot is a full-stack intelligent robotics company focused on perception intelligence. Its core technology is robot vision perception, extending into complete machine R&D and manufacturing. Based on 2024 revenue, is the world's largest intelligent robotics company centered on vision perception technology and ranks number one globally in DTOF LiDAR shipments. Its lawnmower robot business, which entered mass production in 2024, has rapidly penetrated markets in Europe, North America, and Oceania, becoming a major driver of revenue structure upgrade. 2025 revenue is expected to surge 60% year-on-year to 748 million yuan, with gross margin recovering from 19.5% in 2024 to 25.7%, showing successful product mix optimization toward higher price complete machines. However, due to high R&D and marketing expenses, the company remains loss-making, recording a net loss of 62.5 million yuan in 2025. U.S. employment data came in stronger than expected. The Nasdaq and S&P 500 hit new highs again last Friday. The fear gauge VIX rose 0.11 points or 0.6% to 17.19. The Nasdaq rose 1.7% to 26,247 points. The S&P 500 gained 0.8% to 7,398 points, and the Dow closed at 49,606 points, slightly higher. The Nasdaq China Golden Dragon Index, which tracks Chinese stocks, fell 32 points or 0.5% to 6,994 points. For the week, the Nasdaq rose 4.5% and the S&P 500 gained 2.3%, marking the sixth consecutive weekly gain, the longest streak since 2024. The Dow rose a modest 0.2%. Market focus remained on technology growth stocks while traditional blue chips lagged. Sector performance: technology led with a 2.7% gain. Utilities and healthcare saw larger declines. Micron Technology surged 15%. Intel rose nearly 14%, among the strongest performers in the S&P 500. Apple rose 2.1% and Nvidia gained 1.8%, both among the Dow's top 5 gainers. Omdia's latest research shows that the global tablet market remained stable in Q1 2026, with shipments up slightly, 0.1% year-on-year, to 37 million units. Among top vendors, Apple held the number one spot thanks to strong iPad Air performance. Samsung ranked second but saw shipments fall 12.6% to about 5.8 million units due to price pressure. Huawei and Lenovo posted the strongest growth, up 28% and 20% respectively, ranking third and fourth. Xiaomi's shipments fell 13.6% year-on-year. Broadcom fell 3% to $412.56. Reports suggest its $18 billion AI chip partnership with OpenAI may face uncertainties. Under OpenAI's AI chip plan, Broadcom is to fund the first phase of production, which will consume 1.3 gigawatt of data center capacity at the cost of approximately $18 billion. However, Broadcom stated it will only proceed if Microsoft agrees to purchase about 40% of the chips. Under the proposed arrangement, Microsoft would install the chips in its data centers and then lease them back to OpenAI. April non-farm payrolls rose by 115,000, beating expectations of 65,000. March's figure was revised up by 7,000 to 185,000, while February's decline was revised to 156,000 from 133,000. The unemployment rate remained at 4.3%, in line with expectations. Recent signs of a strengthening labor market were confirmed by the April data. Stronger employment momentum will keep the Fed focused on inflation, likely keeping rates on hold for now and increasing the possibility of future rate hikes. The University of Michigan survey showed U.S. consumer sentiment fell further in May to a new low of 48.2 from 49.8 in April, and the third straight monthly decline and below expectations of 49.5. One-year inflation expectations eased from 4.7% to 4.5%, but remained well above the 3.4% level before the Iran conflict began in February. Five-year inflation expectations fell from 3.5 to 3.4%. Our stock pick today is Sanhua Intelligent Controls, stock code 2050. Sanhua Intelligent Controls takes heat pump technology and thermal management system R&D and application as its core. The company focuses on developing environmental thermal management solutions that enable highly efficient heat exchange and intelligent temperature control. Its business spans two major segments: refrigeration and air conditioning electrical components and automotive components. Leveraging long-term technological accumulation and R&D innovation, the group is also expanding into emerging fields such as bionic robot, electromechanical actuators. The group has established 8 production bases worldwide, including 4 overseas bases in Mexico, Poland, Vietnam, and Thailand. Its large-scale production layout provides cost advantages, while its global factories gives the group the flexibility to quickly respond to and meet the different needs of local customers. In addition, its globalized production layout supports localized production or assembly, allowing the group to better cope with rapidly changing global trade developments. Sanhua's products are now sold across the Americas, Europe, Asia, Oceania, and Africa, covering more than 80 countries and regions. In the refrigeration air conditioning field, the group is a key global supplier of refrigeration and air conditioning control components for household air conditioners, commercial air conditioners, commercial refrigeration, industrial refrigeration, and small household appliances. Its products include valves, heat exchangers, pumps, controllers, and sensors. The core products consist of various types of valves, such as electronic expansion valves, four-way reversing valves, stop valves, solenoid valves, and ball valves. The group also supplies heat exchangers, especially micro-channel heat exchangers, pump products such as the Omega pump, and controller products. These products are widely used in air conditioners, refrigerators, industrial refrigeration, cold chain transportation, heat pump heating, washing machines, and other applications. In the automotive sector, Sanhua has become a leading global supplier of automotive thermal management system components. Its strategic products cover electronic expansion valves, electronic water pumps, electronic water valves, plate heat exchangers, and integrated modules. These products fully address various application scenarios, including cabin thermal management, battery thermal management, and motor electronic control system thermal management, achieving precise control and efficient coordination of whole vehicle thermal management. Currently, multiple products from the group have entered the supply chains of most leading new energy vehicle companies for mass supply, demonstrating strong market competitiveness and customer recognition. In the bionic robotics field, the group focuses on electromechanical actuators. In addition to intensifying development of efforts on key components of electromechanical actuators, it is actively expanding overseas production of these actuators and continuously strengthening its R&D team to consolidate its first-mover advantage in the emerging bionic robot electromechanical actuator market investment. Suggestion buy in price $35, target price $38.5, stop loss $33.5. I do not hold the above stock.